Hey, Dan Pastorelli here. Well, next week we have a slow week of economic data coming out. And so the question becomes, well, what trading data is most important next week? So the one big piece we have coming out is we have CPI, which is on Tuesday. And then we have, some numbers that are still have some relevance, like retail sales and capacity utilization. And we also have some housing data like building permits and such coming out on Thursday. And that's the main, as far as what I would call numbers, economic numbers coming out. That's really it. So not really a very heavy schedule. I have not seen any Fed speakers on the docket, but that could be the case. So we're going to keep an eye on that on a daily basis. But other than that, we have a couple of things that are really important to watch. First of all, it's going to be earnings. We still have a fair amount of earnings coming out next week. I want to say next week will probably be the last main week of earnings season, quote unquote, and then we'll get into what's called retail earnings season. So, for the next few weeks, we'll still have some earnings numbers coming out that are important. Outside of earnings, we also want to look at the technicals. And as far as the broad market is concerned, let's take a look at the S&P 500. So this is the spiders, and we see we kind of bounced off a little bit of resistance here at about the 417 mark, give or take. And, we headed south on just sort of moderate volume, really moderate to slightly above average volume. And the more volume that we get, the more relevant it is, because we're seeing that battle between buyers and sellers really taking place more heavily. And when there is high volume and the market goes lower, that means the sellers gained command and really took control of the market in a more decisive way. Now, also that said, there's a couple other things. We have the 21-day moving average right here, and the S&P 500 didn't quite get down to it, but if it ends up crossing below it, that is a moving average where so often we see some follow through. So I would expect some follow through if we permeate below the 21-day moving average. And then the next stops are the support that is created at the 50-day and the 200-day moving average. And in the event we fall below either of those, this market could take off to the downside. And if it doesn't, then those will act as support, and we'll probably get a bounce up, and maybe we'll see the market playing out as a newly established uptrend with higher highs and higher lows. But next week is going to be, the next 2 weeks is going to be pretty pivotal from a technical standpoint. One other thing that's important to watch is the VIX. So we spent a little bit of time with the VIX below 20, in fact, for about a month. And here on a Friday, and remember that Fridays, the VIX tends to be mathematically a little bit lower than average. It's on average statistically the lowest day of the week. We're above 20 in the VIX today on a Friday. In fact, let's just pull up a chart of the cash spot VIX for a second here. I don't look at the VIX from a technical standpoint. I think that that's a bit of a flawed way to look at it. But, that said, since, we've been below 20 in the VIX since January 12th, so just about a full month. We've been below 20 with just one outlier. And today's the first day where we closed above it. It tried to really take off to the upside, but pulled back, kind of got hung up. Again, I don't put much stock into technical indicators or moving averages even on the VIX, but it did get hung up at that 50-day moving average level. So I think from a directional and from a volatility standpoint, technically speaking, next week could be a really, really key important week. So we're going to be watching those numbers that we talked about. If the VIX ends up heading a little bit higher, I think that that's a pretty strong sign that the economy is a little bit more shaky. That said, I hope that helps. This is Dan Pastorelli, Trade Smart.